Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I'm Yatin Mota, and Nandita is back. I think.
And so are the Bulls.
She's taken such a big break. Most of us envy her.
Yeah, I know that we saw 6 straight days of sell-off, but see, I mean, we did see a rebound from Friday when the markets got a whiff that I'm coming back. And of course, we have, once again built on those gains. And in fact, it's the second day of solid gains coming in on the last street, given the fact that we ended around that 19,150 mark. Even though I have to give it to you that it was a wobbly start today. We started below that 19,000 mark, but steady recovery, in the Nifty Bank Index. We recovered nearly 500 points from the day's low on the Nifty Bank Index. Then we had heavyweights like Reliance, of course, contributing to today's gains, the likes of Reliance Industries, BPCL. So the energy pack was pretty active today, and that is something that was instrumental in dragging the Nifty out of the day's low. And in fact, we have ended at the high point of the day. Realty was another pocket that did extremely well, even though mid and small cap indices were underperforming the benchmarks today. Energy, as I mentioned, banks were doing well, but what didn't do well was the FMCG pack. Autos as a pack didn't do well today, Yatin. Stuck in reverse gear. You had names like Maruti, Tata Motors, M&M among the losers, even Aisha for that matter. Maruti reported great set of numbers. We had EPS upgrades coming in. Tata Motors reports this week itself. So auto pack is in focus, but I think it's profit booking something that we saw when it comes to the auto pack. If you look at the Nifty gainers today, BPCL, ONGC, Reliance Industries, all the stocks from the energy basket did well. SBI Life, Ultratech Cement on the expansion plan. That stock was also among the gainers today. On the losers end, of course, UPL came out with its numbers. Yatin will be shedding more light on that. Tata Motors, Maruti, as I mentioned, Axis Bank, Britannia, among the other losers on the Nifty. But Yatin, mid-cap end of the markets?
Yeah, mid-cap end of the market, and let's talk about UPL because, that Nifty company was the top loser in trade because the quarterly earnings disappointed. They posted a quarterly loss, and not only that, they cut the guidance also when it comes to the growth guidance as well as the EBITDA margin outlook. Obviously, with concerns around debt refinancing because, the dollar debt cost has gone up significantly in the US markets, plus the kind of pressure agri companies are facing because of high cost inventory and the dumping which is happening in from Chinese companies clearly is worrying investors, and the stock of UPL clearly hitting a fresh 52-week low in trade today. And not only that, the stock ended at the day's low. Stocks other than UPL which saw some results reaction, and the ones which were weak, let's talk about that. M&M Finance stock was down 12% after weaker than expected earnings, and most importantly because of the patchy rainfall, their rural collection took a hit. The market did not like their asset quality. Same with the AU Small Finance Bank. Neither the markets liked the asset quality, which deteriorated on a sequential basis, but the acquisition also comes at a higher book value, in terms of the valuations. Now, the other stocks which were in focus, Nandita, also include Petronet LNG, and that stock went down as much as 10%, not because of earnings, but because of a big capex announcement.
Okay.
Now, the company's net worth is close to 13,000-14,000 crores, and they announced the unrelated capex of nearly 20,000 crores for the petrochemical business. Now, if you look at the company's parent GAIL, they are into petrochemicals, but for the past 1 or 2 quarters, they have been suffering loss there. So, for the PSU oil companies or the oil and gas companies, the petrochemical business is a difficult business, wherein even Reliance Industries has found success recently in terms of the scale and the size that they have. So, a company of Petronet size which is doing a large unrelated capex, I think market did not appreciate that point, and hence the stock was down nearly 10% in trade.
All right. On that note, let's take a look at the stocks that are on our radar this afternoon, Yatin, starting with Reliance Industries. Of course, I can't not talk about this stock given the fact that it was the biggest contributor, among the biggest contributor in the Nifty's remarkable rebound around midday that we saw today, and of course the fact that the Nifty ended near the day's high of 19,150 or thereabouts. So Reliance Industries, of course, reported numbers on Friday post-market hours, a beat on most counts. Jio had healthy subscriber additions, retail business improving. In fact, even refining O2C businesses did well. Some bit of weakness in petchem business, but that is something that brokerages have flagged off, saying that even though petchem was slightly below estimates. The other segments did pretty well, and most of them were above estimates. And the target price pegged by global brokerages ranged from 2,800 to 3,000 rupees on the stock. So let's talk about Jefferies first. It has a buy call, target price of 3,000 rupees per share. It says that the retail business was marginally ahead of estimates, and retail throughput per square feet has improved or has risen 10% on a quarter-on-quarter basis. It also mentioned that Jio has seen healthy subscriber additions. O2C profitability is something that it has taken note of. And it also said that it expects the company to deliver 13% EBITDA growth in FY24. It says that this makes the risk reward pretty favorable in terms of Reliance Industries. If you look at Nomura, that also has a buy call, target price of 2,925 rupees per share. Healthy growth, that's been flagged off by Nomura. It says that net debt moderating is a positive for the company. Same thing is echoed by Morgan Stanley. It says that earnings were better than estimates, reduction of net debt big positive, and risk reward, even this brokerage has flagged up that the risk reward is pretty much favorable. Overweight rating here, 2,821 is the target price. So Yatin, Reliance Industries on a YTD basis may not have done well, but given the fact that the performance has been so good, retail, Jio, all doing well. So looks, and of course target prices are also ranging higher, 2,800 to 3,000. So looks like, we could say perhaps that the worst is over for the stock, at least for the time being.
Yeah, absolutely, and I think it's a well diversified conglomerate with interest in retail and telecom, and that business segments are also doing well. Obviously, O2C has its own tailwinds or headwinds depending on what quarter or what seasonality it is. But as of now, it seems that the Singapore GRMs are quite low for the O2C business to perform really quite strong or contribute in Q3 so far. Obviously, shifting focus from Reliance Industries, and the disclaimer is already on your screen. But Cipla is one stock wherein a lot of traction was seen in trade today. Obviously, in the conference call, the management expects better run rate of the US business, and more importantly, the EBITDA margin trajectory also should look better, is what the management believes for the second half of FY24. Now, Nomura has a buy call on Cipla with a target of 1353. Obviously, the management did not talk about the ongoing deal transaction with Torrent, because there is one M&A transaction which has been reported widely in media. But if you talk about the company's fundamentals, the margin guidance has been up. The margins for the Q2 expanded, versus the street expectations of a contraction or a flattish kind of a tone sequentially. And, the gross profit margins was almost 1 percentage points ahead of estimates. So, quite strong, business momentum for Cipla for the second quarter, and the outlook is also bright, because of which, in a market like this, a lot of fund managers are preferring pharma stocks in order to have some defensive stocks in their portfolio.
That's right, Yatin. Even though I think Cipla on a YTD basis is up 11% or thereabouts, but interestingly, over the last 6 months, it's up 30%. Of course, a lot has to do with the talks about the promoter stake sale, and we really don't have color as to what the management plans to do. But it did end up pushing up the stock higher by quite a bit since the month of July. But let's also talk about the second stock that's on my list. It's from a midcap IT company, KPIT Tech. That company reported its numbers, good set of numbers, given the fact that IT pack as a whole has reported mixed set, with large caps, of course, reporting weakish set of numbers, even some mid caps for that matter. But KPIT stands out given the fact that profits have grown 5% on a QOQ basis, revenue up nearly 9%, EBITDA up in double digits 12%, all on a quarter-on-quarter basis. But the most interesting fact is the point that it has raised its CC revenue growth outlook for FY24 to 37% and above, from 27 to 30% earlier. Even the EBITDA margin outlook for FY24 has been up to 20% plus, from 19 to 20%. Now, this comes at a time when, of course, we remember that the likes of Infosys have trimmed their upper end of the guidance, and even some of the mid-cap companies have, of course, said that they are cautious in the wake of the global macro environment and slowing client spends as well. But that's the thing. This stock stands apart, given the fact that it has raised its guidance at a time when global macro environment is uncertain. client spends are being scaled down, but the company says that it is watchful of the global macro environment, but the clients are still committed to spending or making investments in newer and relevant technologies. So that's some bit of a good positive commentary coming in from the management as well. And aside of that, the company has also won strategic multi-year engagements from a European as well as American car maker in the quarter gone by. And if you look at the stock, it's up 70% on a YTD basis. So kind of commentary and reports and the earnings coming in from this company looks like it could build on the gains going forward at a time when IT companies they are a little iffy when it comes to the future growth trajectory.
And Nandita, if you remember, a few months back, JP Morgan had downgraded the stock with the initiating coverage. On that day, stock was down 15%, and after that, there is no looking back. In fact, big analysts are also not able to really, really access the scale of business that KPIT is doing, and probably that sell call of JPM has not worked with stock showing strong results and the strong price performance also, which is seen on the screen.
Well, those were all the stocks on our list, this afternoon. But of course, Yatin, it's an earnings-heavy week. You have the likes of L&T reporting numbers tomorrow. You have Tata Motors, SBI at the fag end of the week, Saturday. And of course, we have the important Fed decision on Wednesday night. So, of course, we'll be reacting to it on Thursday. Of course, heavy week in terms of news as well as earnings. We'll see whether or not we manage to hold on to the gains that we have seen over the last two sessions or not. But for now, it's a goodbye from us. Thanks a lot for tuning in. For all your other news and updates, stay tuned to Moneycontrol.